Today is August 27th, 2016, and this is a post-trade review for ticker symbol ILF, the iShares S&P Latin America 40 Index ETF. This is a weekly chart of the ETF, and as you can see, it spent most of 2014 and 2015 in a long downtrend with some counter trend rallies along the way. But it did reverse at the beginning of 2016, along with probably the majority of U.S. markets. So I decided to keep this on my watch list because it had been so beaten down in the previous year. Moving to the daily chart where I took the trade. Let's go back to January. We can see that it began moving up and started hitting all the moving averages, crossing over all of them, and eventually made a high back in April, March. Where are we on March? April 29th. Okay, last day of March, April. So we made a temporary top here, and then we began to consolidate down into this area right here. Now, this area later became known as visible as a cup pattern. We started moving back up and formed another and broke out above it, but the breakout was kind of weak, so we actually topped out again and pulled back into here, which is, I guess, kind of a sloppy handle. But it is a cup and handle shape, but that wasn't what the trade was about. So it's irrelevant. So I'm going to take these off here. But it's an interesting confirmation that we did have an actual shape taking, or pattern taking shape. So the actual trade takes place after we make this top here and start pulling into this area between the 10 EMA and the 30 EMA. It's what Elder calls it an action, or he calls it a value zone, but this is where I would normally take action on pullbacks. So between the 10 and the 30, ILF started pulling in, and I was waiting for it to get as close as I can to the 30-day moving average, and it did so on August 3rd. So let me put the entries and exits back on. Okay. So on 8-3, I said if it breaks above 8-3 the next day, then I'll enter the trade. So here on 8-3, we can see we had a nice big candle, a nice green candle here. We had a lot of healthy buying action taking place, and I didn't actually wait until my buy stop triggered, so I went ahead and entered before the actual buy stop should have entered. So my entry here was at 27.60, and then I immediately put a stop loss order for the low at 26.93, which is a 2.4% 2.4% risk. The next day we gap up. Although we reversed off the top, it was still healthy action for the day, and I moved my stop to the low of that day. The next day, we wound up forming a hammer, and I considered adding more shares to it, but I originally took my full position at the entry, so I let that go. Now, somewhere along the lines during that day, I hit a 2.4% profit, and I took half the shares off. And the reason I do that is once I hit a profit percentage equal to 1R, which is my risk from my entry to my original stop, once I hit 1R, I took half my shares off and let the rest ride. So the next day, healthy move up, gap up, and healthy action. And I'm moving my stop up along the way. Now on 8-10, we had a down day, and technically if I had a hard stop in there, I would have been stopped out early, because it did reverse off that off the previous day's low. So my stop is always a mental stop because I don't want to be shaken out of anything. And in this case, it worked out well because we did reverse up off where the trailing stop would have hit, and the next day we moved up even higher. Again, my moving stop went up. Down here, I didn't move my trailing stop down. I kept it as is for the next day, because you always want to move your trailing stop up, not down. The next day, healthy action, but the following day on 8/12, we had a close near the bottom, and I'm not liking the looks of this candle. So the next couple of days, still healthy action. I'm trailing my stop, and eventually on 8/17, my trailing stop got triggered, and I got out at my second half of my position at 29.28 for a profit of 6% on that portion of it. And as you can see, it was a good thing I did, because the next few days it was all downhill. So the total average profit for this trade from start to finish was 4.2%, which is not bad in this market. I will take that any day over 0.5% or 1/4% at the bank. Looking back, was there anything I would have done differently? No. My entry was a bit premature because I didn't wait for that stop to trigger, but I saw the healthy action anyway and got in as soon as I could. I honored my stops along the way. Mental stops. I had to make sure to use mental stops because I don't want to get stopped out with intraday moves below the stop that would have triggered me out. But other than that, I would give myself an A+ on this trade. It worked out well. I followed my rules and trade management, and it was a successful trade. And I'd give myself an A+.